Yes. So, hello students, how are you? This is your teacher Haris Bhatt, and you are seeing my YouTube channel, Learn Accounting with Sir Haris. Today we are going to solve a question from A-2-Accounting. The topic is International Accounting Standard, which is definitely a most difficult part of your syllabus. As far as the February-March 2025 will appear in front of me, then I will be able to tell you that which question is going to come in May-June 2025, variant 32. So let's do this question. That question from IES has come in February-March 2332. This is not a difficult question. If we talk about the complexity of IES, this is not a difficult question. So let's read this. The draft statement of financial position of T Limited at 31st December is as follows. Non-current assets are given, property, plant and equipment. Then current assets are given, including inventories, other receivables. Equity is given. 4 lakh shares are there of $1 each, share premium, revaluation reserve, retained earnings. Current liabilities, we have trade payable and other payable. Following information is available. A proposed dividend of 0.05 per share had been accounted for and set against the retained earnings accordingly. Now, this is Fareed. This is the whole entry which has been passed. In the previous question, we have talked about this, that why we are subtracting or adjusting this proposed dividend only in the statement of financial position. Why not in retained earnings, or why in retained earnings and not in statement of financial position? Because it was clearly given that the proposed dividend has been adjusted or has been added in the other payable. So you have to subtract it only from other payable. But now this is clearly mentioned that proposed dividend has been accounted for. It means that it had been recorded in the books with both the effects of debit and credit and set against the retained earnings. So proposed dividend, according to IAS 10, it is a non-adjusting event. It should not be recorded in the books of accounts because it is, unless it is approved by the shareholders in the annual general meeting. It is only declared or recommended by the board of directors that this 0.05 per share dividend, but we have recorded it in the books. It means that we have recorded it in the other payables as current liability, and we have also recorded it, we have subtracted it from retained earnings. Obviously, dividend needs to be subtracted from retained earnings, and other payable, we have included it in the other payable account, which is absolutely wrong, because dividend proposed will not be recorded in the books. Only dividend paid is recorded in the books, right? Previous year dividend is supposed to be paid in the current year. Proposed dividend of 0.05 means that the shares which are already stood up in this question is 4 lakh. So 4 lakh into 0.05, it will be 20,000. So 20,000 will be added in retained earnings because it is subtracted, wrongly subtracted. And in other payable, we have written the current liability, which is also should not be a part of the current liability. So in other payable, we will subtract post dividend from other payable also, right? So added in retained earnings and subtracted from other payables. Next, a machine cost 42,000 was purchased on 1st July. On the same date, T Limited also paid 8,000 for a 4-year repairing contract starting on that date. The total amount 50,000 had been included in the machine account. Depreciation on machine is provided at 20% per annum using the reducing balance method with a full year depreciation in the year of purchase. So let's discuss that. Sometimes students used to find it a little difficult. We have purchased a machine costing 42,000, but we have entered into a repairing contract also with a amount of 8,000 for a 4-year repairing contract starting on that date. And he means the repairing contract has been started on 1st July 2022, on the same date on which we have purchased the machine. So instead of adding 42,000 in the machine account, we have added 50,000. It means from the non-current asset, we have to subtract 8,000 minus 8,000 from non-current asset because it is not a non-current asset. It is an expense. But repairing contract is an expense, but 8,000 is an expense for the 4-year. But if we talk about current year, that will end on, that is going to end on 31st December. So only 6 months has passed. So the 8,000 expense will not be recorded in the books. Even we have paid that. The only expense will be recorded is going to be how much? That is that is going to be how much for 6 months. So how we are going to calculate it? 8,000 is the amount. That is the most difficult point in this question. Divided by 4. So the yearly repairing contract is 2,000 into, for half year, the expense is going to be 6/12, that is 1,000. So actually our repair expense, which should be recorded as an expense, is 1,000. That needs to be subtracted from retained earnings because profit is included in retained earnings. And 7,000 will be treated as current asset because it is prepaid repairing expense. So that will be added in other receivables with an amount of 7,000. So 8,000 we have paid, but 8,000 payment, 8,000 we have paid, but 8,000 payment should not be recorded as the 8,000 have been paid, but it should be recorded in the books of account after payment. 7,000 should be shown in the current asset section as prepaid expense, and 1,000 is basically the expense which should have been recorded in the books, which is not yet recorded. So from retained earnings, we will subtract 1,000, right? And 7,000 will be written in the other receivables account in the current asset section. Unfortunately, giving such type of a treatment, unfortunately, what we have done, we have added 8,000 in the machine account directly, right? So we have to subtract 8,000 from machine account, right? And we have to record 1,000 as repair expense. So it is subtracted from retained earnings, and 7,000 will be written in other receivables because it is a current asset. It is supposed to be recorded in the current asset section. Okay. So this is how the treatment will be done. And the 8,000 which is recorded in the machine account, we have recorded depreciation on 8,000 also, which needs to be adjusted also. So 8,000 into 20%, that is going to be how much? That is going to be 1,600. So 1,600 of the depreciation also should be added in the non-current asset, and 1,600 will also be added in the retained earnings because we have subtracted more depreciation, right, from the non-current asset, because depreciation of machine provided on at the rate of 20% per annum using the reducing balance method. So we have calculated depreciation 50,000 into 20%, but it should have been 42,000 into 20%. It means that 8,000 into 20%, 1,600 has been overcharged. It will be added in the non-current assets, and it will also be added in the retained earnings because we have subtracted more depreciation. And 1,000 is an expense. It is a repairing expense. We will record it in the repairing expense, and 7,000 is the other receivable. Let me pass an entry for that. Although the entry is not required, but I'll still pass the entry for you. Let me see. Sorry, just a minute. Though entry is not required, but I am passing the entry. So what is going to be the entry? Repair expense, which is going to be adjusted now in the retained earnings column, debited, right? Then prepaid repair expense, which is going to be recorded in the other expenses with an other receivables, prepaid, which is 7,000. This is going to be 1,000, and machine is going to be credited because we have debited machine with an additional amount of 8,000, which is not a non-current asset. Same is the case with depreciation. We will go for a reverse entry, provision for depreciation to profit and loss account in order to cancel the depreciation, which is going to be 1,600. This is the most complex point of this particular question. And definitely this is A2. So the students used to find it a little difficult actually. The only property of T Limited, next point, was revalued upward by 6,000 2 years ago. This property was revalued again on 31st December 2022. The decrease in value of 35,000 had been set against the retained earnings. So this is quite easy. See, the only property of T Limited was revalued upward by 60,000 2 years ago. So there is going to be a revaluation reserve of 60,000 written over here. Now there is a revaluation downward. Always remember that revaluation downward will be subtracted from revaluation reserve first and then from retained earnings. So what we are going to do, we will add 35,000 in the retained earnings because it is not supposed to be recorded supposed to be subtracted from retained earnings, and it will be subtracted from revaluation reserves. Okay. So entry is going to be revaluation reserve debit, and retained earnings is going to be credited. If you want to pass the entry, you can. Otherwise, you can go for the effect. I will repeat again. I'm going to repeat again. Retained earning में से आपने 35,000 माइनस कर दिया था, which should not have been subtracted because revaluation downward should be subtracted from any revaluation reserve already held. We have revaluation reserve of 60,000, so it should be subtracted from 60,000, and it needs to be added in retained earnings because it is wrongly subtracted from there. Okay. Next is going to be the carrying value of a motor van is 27,000 was included in the non-current asset. The value of the motor van was revalued on that date. It had a value in use of 23,200 and it could be sold for 24,500 for after, but a selling cost of 1,800 would be incurred. So easy, 24,500 is the fair value minus cost to sell is 1,800. How much it will come? 24,500 minus 1,800. How much? Uh, 23,800. So did 22,700. Okay. 22,700. So which is the higher value? The value in use is 23,200 and the fair value is going to be, how I'm going to record it, higher of fair value and value in use. Higher of the fair value and value. This is the recoverable amount, and that is 23,200. So the minus 23,200 is the recoverable amount. The difference is going to be the 3,800 is the impairment loss. This is going to be the impairment loss. We will record it, impairment loss. Next point is in December 22, an employer was injured on the office premises. Yeah. Legal proceeding have started. The company lawyer was advised that T Limited would probably be found liable and the compensation would be 9,000 as the case will be heard in court in April 2023. The director had not accounted for the compensation in the draft financial statement. So this is going to be a provision supposed to be created as per IS 37 because the liability is basically the compensation is probable and the amount is estimated reliably. It is 9,000. So we will record provision because there is more than 50% chances. It is not possible, right? So there is more than 50% chance. So we will record provision means that we will subtract 9,000 from retained earnings and we will treat it as a provision for compensation. We can add it in the other payable with an amount of 9,000. Okay, I will discuss every point again when I will move forward. Explain the reference to relevant accounting standard, the approved accounting treatment for the item information number 4. So for information number 4, we have already discussed that IS 36 impairment of assets suggests that carrying amount is supposed to be reduced by which the carrying amount is more than the recoverable amount. And recoverable amount is higher of fair value and value in use. Fair value is 24,500 minus cost to sell 1,800. So fair value is 22,700 and the value in use is 23,200. So higher of the both will be 23,200, which is the recoverable amount. Carrying amount is 27,000. So jitni aapki carrying amount recoverable amount se zyada hai, by how much the carrying amount is more than the recoverable amount, that is your impairment loss 3,800. It needs to be subtracted from retained earnings as a dead loss, and it will also be subtracted from non-current asset section. Then information number 5, that is IS 37 provisions, contingent liabilities and contingent asset. It suggests that it is probable that the liability is going to be occur in the future because it is probable. So we will record it as a provision because the lawyer suggests that there is more than 50% chance that we have to make the payment for this liability, for this compensation. So we will record it. We will subtract 9,000 from retained earnings and we will record it in the other payables because it will be treated as a current liability. Next, we have to find the statement showing the adjusted retained earnings. So let's see what is the retained earnings and we will adjust it accordingly. So retained earnings are going to be 86,000. Let me calculate it. retained earnings is going to be 86,000. Then I will subtract impairment loss. That is going to be 3,800, right? Then there is going to be repair expense, which should be recorded as repair expense, not recorded. So expense is going to decrease the retained earnings, obviously. So that's why. Then there is going to be a wrong depreciation charged, which needs to be added in the retained earnings. That is 1,600. That is the wrong depreciation, which should not have been charged because 8,000 has been recorded as non-current asset, while it was not a non-current asset at any cost. So 86,000 will be there. And now we are going to record it. Provision for compensation. The compensation provision, I will adjust this over here. Less provision for compensation, which is a expense also, liability also, and that is 9,000 still to be paid. Then we are going to have that revaluation of what was the revaluation? Revaluation of what? There was a revaluation loss actually downward, right? Which has been added, which has been subtracted from retained earnings. Rather, it should be subtracted from revaluation reserve. So I have to add it like this. Then proposed dividend has been recorded, subtracted from retained earning, which should have not been subtracted. 20,000. How come, sir? 4 lakh is the number of shares into 0.05. So amount is going to be 20,000. It will be added in the adjusted profit or the retained earnings, and it will also come other payables. It will not come in other payables. It will also be subtracted from other payables. So what is the answer? Please tell me. What is the adjusted retained earnings? That is going to be 128,800. Okay. So this is how we are done with the adjusted retained earnings. We have prepared the adjusted retained earnings accordingly. If you have any question, you can ask me. Yeah. Right. So all the corrections we have made. I repeat again, if you want me to do that. Impairment loss is 3,800. We have calculated it like here. Then we have repair expense of 1,000, and 7,000 will be shown as a prepaid expenses, prepaid repair expense, because we have paid, but we have not utilized that expense because that was a contract of 8,000 for 4 years. So 2,000 will become for each year, and only 6 months has passed. So current expense at the end of the year is 1,000. Wrong depreciation charge because 8,000 have been added in machinery. It will be subtracted from machinery, and depreciation has already been charged. So we have to add depreciation 8,000 into 20%. Provision for compensation will be subtracted. Revaluation loss wrongly subtracted will be added, and proposed dividend wrongly subtracted will be added. Now I'm going to prepare the statement of financial position, and you will help me because I need to go for I will subtract the things which I don't need to require any more. Although these entries will have an impact in the prepaid expenses and will also be subtracted from machine. But because I don't want to rub that particular portion, I'm going to prepare the statement of financial position over here. I hope that you have recorded already the entries I have passed. Though entries were not required, but examiner can ask the entries also. So you should have an idea, little idea about the entries also. And you can clear your concept through entries also if you want to. But direct impact can work also. So let's see. First, the property, plant, and equipment is given. I am right over here. Property, plant, and equipment. That is 4,25,000. I have to adjust this amount. How? 4,25,000. I will minus 8,000, which we have added wrongly, plus 1,600. The depreciation which should not have been charged, and we have charged the depreciation. Then there is going to be an impairment loss of 3,800, and I think we will get the amount for the non-current asset. So what is going to be the amount? That will be how much? Let me calculate 414,800. So I'll write over here 414,800. Now I'm going to write the current asset section. That will come over here. We will have closing inventory, then we are going to have the trade receivable, then we are going to have the other receivable, and then cash and cash equivalent if given. So let's see. Closing inventory 42,000. There is no effect in the closing inventory, so I will write over here 42,000 because it does not have any impact. Then trade receivables, again, there is no change in trade receivable. That is going to be 2,25,000. Let me just correct it. I will write over here trade receivable 2,25,000. Other receivables, we have how much? We have other receivables of 6,000. So we have to add 7,000 in this. Why, sir? Because 7,000 is prepaid repair expense. So it needs to be added in the other receivable. Because we have paid the expense, but in the next 3 years, we are supposed to utilize this. Cash and cash equivalent is 74,000. I will write here. Now let's go for the total of the current asset section. And then we are going to have the total of the total assets. So what is the total of the current asset section? Can you please tell me? The next part is going to be the equity and liability section of the, which comes first of all, we used to write the ordinary share capital, and then there is going to be share premium. Then we have revaluation reserve, and then we are going to have retained earnings. Let's see what is the total of the current asset section first. That 354,000, and the total assets are going to be total assets are going to be how much? That will be 768800. Thank you. 768800. Now let's talk about the ordinary share capital. That is 4 lakh. Share premium is given. That is 35,000, right? So it will remain the same, 35,000, no problem. Revaluation reserve 60,000, and I will subtract 35,000 from revaluation reserve because unfortunately we have added added revaluation. We have gone for revaluation downward of a non-current asset, which should be subtracted from revaluation reserve rather than retained earnings. Because when there is a revaluation downward, first we subtract that amount from revaluation reserve, and then if more amount is needed, it will be subtracted from retained earnings. Okay, so it will become 25,000. Then we'll talk about the retained earnings, and from retained earnings, it is very, very easy, but it is the amount of retained earnings. Let me see, 86,000. Okay, so first we have to add 1,600 of depreciation, which has been overcharged, minus 9,000, which was the provision for compensation, which needs to be adjusted. Okay, we have already calculated. Sorry, retained earnings, the adjusted retained earnings we have already calculated, so we can write it like here. We don't need to calculate it again. 128800. So what is the total now? Yes, 588,800. Yes, you are right. So we can write 588,000 over here. Now comes the non-current liability. Let me see if there is non-current liability. No. So trade payables are given and other payables are going to be written. So current liabilities only is a part of the game. So there comes the trade payable and other payable will be there. So trade payables are 152,000 and other payables are given over here. That is 39,000, and I will adjust other payables. 39,000 minus 7,000. Oh, sorry, 39,000 minus 9,000, which is the provision for compensation. That will come in other payable over here. We have subtracted it from retained earnings. It will also come in the current liability as other payables. That is provision for compensation, one and the same thing. So that will treat that way. Then proposed dividend will be subtracted, has been subtracted from retained earnings. It is added in retained earnings, and it will also be subtracted from the 39,000 to find the other payable, because it is not a current liability anymore. It should not be treated as a current liability. So that will 28,000 is going to be the answer for this other payable. So total is going to be how much? 180,000. And now we can go for the total of equity and liabilities, and that is going to be the same total which we are supposed to acquire, means that it will come correctly as we are done with that now. So these are not easy questions, they are quite difficult, and I believe that we are able to understand this topic, because this is one of the last question I have gone for. 768800. Right. So this is the last question we have solved. Provision for compensation. No. The other payable compensation has not yet been recorded actually. So we have debited retained earnings. We have subtracted it from retained earnings also. And then we will also write it as current liability, because that is according to IS 37. That provision is a liability for uncertain time and amount. Okay. So this is how we have prepared the balance sheet of this particular question. So information 4, 5, we are done with this. So explain 3 responsibilities of an external auditor. We have discussed this in the last class, so I am not going to go for it in this class. So tomorrow I will go for a class of IS, because some part of the questions are still, I need to do that with you. The last one, although it's a theoretical question, but it's a numerical come theoretical question. So I'm going to do that question with you tomorrow, inshallah ta'ala, right? So that it won't create any problem for you. This is the question actually, training, and these are the questions. October, November 21, 31. So I'll solve it in front of you tomorrow, because time is short and we are recording the class also. So any problem you can ask me regarding this question. Yes, it will be added. Yes, you're right. Plus का sign डालना था ना. We have added actually, but just I have gone for a wrong sign. 39,000 plus 9,000, because the entry for this is retained earnings debit with 9,000, and provision for compensation, which is a liability, is going to be credited with 9,000. Okay. So 39,000 plus 9,000 minus 20,000. You can write separately also, no matter. If you're subtracting it from retained earnings, you can write provision for compensation in other payable, or separately you can write provision for compensation in current liability. Even then, it is fine. But it is a better option always to follow the mark scheme. So we are going to write it in the other payable account. Always remember, I have discussed with Noman Bhai also, we are not supposed to prepare any mark scheme. Because if we talk about mark schemes, there are only, how much marks has been? Only 3 marks is basically for this. Then